If you missed the Bitcoin rally or the rise of stocks like Tesla and Nvidia, MicroStrategy could be your next big opportunity or your biggest risk. It's not just a software company anymore. MicroStrategy has become the ultimate leveraged Bitcoin play. But is it worth your investment? Let's break it down. MicroStrategy used to be a business intelligence company at its core, but today it's essentially a Bitcoin holding firm. This dramatic pivot was led by its charismatic co-founder and executive chairman Michael Saylor, who bet big on Bitcoin during its early stages. The company now owns over 450,000 Bitcoin, valued at around $43 billion. But here's the kicker, its market cap is closer to $85 billion. That means investors are assigning a huge premium to its shares, well beyond the value of its Bitcoin holdings. This transformation has made MicroStrategy a lightning rod for debate. On the one hand, some see it as a genius move to ride the Bitcoin wave. On the other hand, skeptics argue it's a leveraged bet that could implode during the next crypto downturn. Let's explore both sides. Once upon a time, MicroStrategy was a leader in business intelligence. In fact, it was ahead of its time, focusing on data analytics before the data revolution took hold. But under Michael Saylor's leadership, the company shifted its focus almost entirely to Bitcoin. Why? Michael Saylor believed in Bitcoin as a future of money, a hedge against inflation, and a generational wealth building opportunity. The problem? That pivot came at the expense of its core business. Today, the company's software and business intelligence operations generate minimal revenue and have essentially become an afterthought. Now, let's dive into the numbers. And I have to say, it's not a pretty picture. MicroStrategy's financials paint a story of a company that's entirely dependent on Bitcoin. With its core business of business intelligence taking a backseat, let's break it down. Over the trailing 12 months, MicroStrategy reported $467.2 million in revenue, a slight decline from $496.3 million in 2023 and $499.3 million in 2022. While these numbers might look stable on the surface, the underlying picture is far more complex. The company's gross profit came in at $343.7 million, translating to a gross margin of 73.6%, down from 77.9% in 2023 and 79.4% in 2024. This decline in profitability reflects growing challenges in maintaining its core business operations. But here's where it gets worrisome. MicroStrategy's operating income is a staggering loss of $468.4 million, with an operating margin of negative 100.2%. Yes, you heard that right. The company's losses are greater than its revenue. Compare that to 2023, when operating income was already negative at $115 million, and 2022, where they just had a modest gain of $6.1 million. Clearly, the company's struggling to keep its operations profitable. Now, let's look at the expenses. Selling, general, and administrative expenses totaled $277.1 million, up from $265 million in 2023. Meanwhile, R&D spending stayed consistent at $123 million, indicating the company's continued investment in innovation, even as revenues falter. Combined, these factors contributed to total operating expenses of $777.8 million, nearly doubling their total revenue. But the financial challenges don't stop there. The company's net income for the TTM was a loss of $406.7 million, compared to a net gain of $429.1 million in 2023. That's a significant turnaround, driven by losses tied to their Bitcoin holdings and other financial activities. Net margin also flipped dramatically from positive 86.5% in 2023 to a deeply negative 87.1%. This volatility underscores just how much of a gamble MicroStrategy's Bitcoin strategy has become. Finally, let's talk about earnings per share. MicroStrategy posted a basic EPS of negative 2.02 and a diluted EPS of negative 2.1 over the TTM. Compared to 3.2 in 2023, the negative EPS reflects the losses that Bitcoin price volatility and high operational costs have inflicted on the company. So why does this matter? These numbers illustrate a company that is heavily reliant on Bitcoin's performance and is burning through cash to sustain its operations. While the upside potential of Bitcoin could drive MicroStrategy to new heights, the financial risks are undeniable. The company's leverage-heavy approach amplifies both the rewards and the risks, making it a polarizing investment choice. In 2024, MicroStrategy's stock hit all-time highs, climbing from $12 in 2020 to over $540 in November of 2024. However, it didn't stay there for very long. After reaching its peak, the stock dropped by 38% in just 4 days, eventually falling below $290 by the end of the year. So far in 2025, the stock has shown some recovery, trading above $340, but it remains highly volatile. The stock's market cap still far exceeds the value of its Bitcoin holdings, suggesting that the market is pricing in means significant future gains for Bitcoin. If these expectations are not met, the stock could see further declines. Despite the risks, bulls see MicroStrategy as a way to amplify Bitcoin's upside. If Bitcoin keeps rising, MicroStrategy's leveraged position could lead to outsized gains for shareholders. Essentially, it's a way to invest in Bitcoin with extra torque if you're willing to stomach the volatility. Michael Saylor's influence in the crypto world is also worth noting. He's become a prominent Bitcoin evangelist, using his platform to advocate for its adoption. This visibility has brought attention to MicroStrategy, turning it into a sort of flagship for Bitcoin believers. But let's not ignore the red flags. Critics argue that MicroStrategy doesn't offer anything unique. If you're bullish on Bitcoin, why not just buy Bitcoin directly? Or if you're interested in crypto businesses, why not just invest in Coinbase, which has a strong operational component? Even bulls acknowledge that 98% of MicroStrategy's value comes from Bitcoin. The remaining 2%, its software business, barely moves the needle. Essentially, it's a Bitcoin play wearing a business intelligence wrapper. And for many investors, that's not enough to justify the risks. Adding to that, the company's average purchase price for Bitcoin is over $60,000 per Bitcoin, meaning any significant drop below this level could spell trouble. Adding to this risk is the company's commitment to never selling its Bitcoin, even to pay off debt. While its zero-interest bonds provide some leeway, continually issuing debt raises questions about long-term sustainability. Furthermore, the stock's valuation reflects not just Bitcoin's current price, but its expected future growth. If Bitcoin fails to deliver on these expectations, MicroStrategy's stock could face significant downward pressure. The biggest risk with MicroStrategy is leverage. While Bitcoin itself is volatile, MicroStrategy amplifies that volatility by borrowing heavily to buy more Bitcoin. In a downturn, this could lead to significant losses or shareholder dilution. Additionally, regulatory scrutiny of cryptocurrencies could create headwinds for the company. There's also the question of sustainability. Without a strong operating business to fall back on, MicroStrategy's fate is entirely tied to Bitcoin's performance. And let's face it, crypto winters happen, and they can be brutal. Looking ahead, MicroStrategy's fate is tied to Bitcoin's performance. If Bitcoin enters a prolonged bull market, the company's leveraged position could lead to massive gains for shareholders. However, the company faces several challenges, including managing its $4 billion debt load without selling Bitcoin, convincing investors that its strategy is sustainable, and navigating the inherent volatility of Bitcoin. While the next major bond maturity is in 2027, MicroStrategy must continue to innovate and adapt to remain viable in the long term. So the golden question, should you invest? Here's the bottom line. MicroStrategy is a high-risk, high-reward bet. If you believe Bitcoin will skyrocket and you're comfortable with volatility, MicroStrategy could deliver amplified returns. But if you're risk-averse or looking for a company with a solid underlying business, this probably isn't the stock for you. At its core, MicroStrategy is a leveraged Bitcoin trade. It's not for the faint of heart, and any investment should be made with a clear understanding of the risks involved. MicroStrategy stock is a roller coaster ride, driven almost entirely by Bitcoin's highs and lows. So what's your take? Is it worth the risk, or are you better off sticking with direct Bitcoin exposure or other crypto plays like Coinbase? If you're looking for a stock that's the complete opposite of MicroStrategy and could be a literal safe haven for your cash, click on the video on screen right now and don't miss out. Thanks for watching till the end of the video, and as always, happy investing.